All right, so we're good to go, right? All right, so let's look at this teaser. An entity entered into a lease agreement for a lease of a warehouse from ABC Limited. Details of the lease agreement includes: 1. An annual rental payment of 1 million naira, including the cleaning and routine maintenance services, payable in arrears at the end of the year. Appropriate discount rate is 5%, while lease term is 3 years. The standalone lease rental for similar warehouse is 900,000, while the service and maintenance charge is 150,000. You are required to determine the amount of lease and the non-lease rentals. We are required to determine the lease and non-lease rentals. For those who have seen similar transaction before, you will bear me witness that our lease transactions will usually appear in this form. The only variance may be that the transaction may be for a period beyond 3 years or less than 3 years. For you to account for this within the purview of IAS 17, for you to account for this within the purview of IAS 17, you are simply expected to debit the rental expenses in your P&L account and recognize the payment, or in the P&L ledger as the case may be, and recognize the payment in the bank if it has been paid for. Oh, I'm getting a feedback that the screen is blurred. Okay, let me make little adjustments. Confirm to me as soon as it's fine. Just say aye when it's fine. Can you see my screen now? Please confirm, say aye if it is clearer. Is it better now? capital.
We can't hear you. The sound system is a bit bad. Maybe you should check your connection.
Yeah, trying to adjust that now.
Radio Cunyosa.
Is it okay now? How is it now? Hello? Please confirm if you can hear me. Please, I think we just have to manage it like that. I'm so sorry. I don't know what happens to the network. All right, so let's quickly go on to addressing the concern at hand. How do we respond to this within the context of IAS 17? As far as IAS 17 is concerned, you will just simply recognize these as an expense by debiting the rental expense and crediting the means of payment or the accrual, right? But IFRS 16 has come to change the modality for this reporting, and that is what we'll be looking at today. The rental expense from this annual rental payment in this question is 1 million naira. But from this 1 million naira, there is an element of the non-lease component therein. There is an element of the non-lease component therein. But the problem in this question is this. The contract did not say explicitly out of the 1 million naira, what portion of it is the non-lease component and what portion is the lease component. However, we have a similar arrangement which is very close to this particular rental arrangement. In that similar arrangement, the standalone lease rental expense under that similar arrangement provides that the rental was 900,000 and the non-lease component is 150,000. So we will model our estimate based on these similar standalone rent contracts. So I will share my screen where I can actually show you an Excel computation or calculation of this. 1 minute, please. Hello, are we there? Please confirm if you can see my Excel, my screen showing an Excel file. Please confirm on the chat room if you can see my Excel file. Say hi if you can see my Excel file. Okay, Benjamin can see it, so I presume every other person can see it too. So what is the approach we will adopt in creating, making this appropriate reporting? The very first thing is that, had it been in the question, the rental component and the non-rental component has been given, we would not need to have done this very stage one, right? So please, in this scenario, what is the rental? Can you confirm on the chat room the annual rent? What is the annual rent as we read in the earlier question? What is the annual rent? Can you confirm on the chat room? What is the annual rent? 1 million, good. So our annual rate in this, our simulation will then be 1 million, right? The lease component of it, we were not given in explicit terms what the lease component and the non-lease component is. But we have a similar arrangement where the lease is 900,000, right? And the non-lease component is 150,000. If you add that together, that will give us what? Can somebody confirm to us the summation on the chat room? The addition of 900 with 150. I just wanted to be sure that we are all together. Who can give me the simulated, the standalone similar rental agreement? In the question I read earlier, 900,000 was the rent component of that similar arrangement, and 150 is the non-lease component. Awesome, awesome. So it shows we are together. So now we are now using this model to be able to allocate the annual rent into the lease component and the non-lease component. The lease component in this instance is 1 million naira. So I will make this 1 million naira, while the model I'm using is in a similar rental agreement, we are having rent to be 900. So I'm taking a fraction of this, 900 out of 1,050,000. That will give us 857,143. Now, if you understand this, just say hi on the chat room. If you understand this, just say hi on the chat room. If you understand how we got the 857,143, say hi on the chat room. What we did is the rent agreement in this context is 1 million naira. Now, the question did not give to us what portion of this rent is lease and what portion of this rent is non-lease. So we now look for a similar arrangement, a kind of rent that is not far-fetched from this particular one of 1 million naira we are looking at. In that similar arrangement, that person is paying annual rent of 900,000. I'm getting a feedback that some people cannot hear me. If you can hear me, say hi. If you can hear me, say hi. Awesome. Awesome. Please don't forget to share your email address and your name with your phone number so that we can share the slides with you. So in a similar rent arrangement, we have the rental component to be 900,000. And we have the non-lease component to be 150,000. If you add that together, that will give you 1,050,000. So what we need to do to be able to use this parameter, this metrics in sharing the annual rental of 1 million, you will just simply come here and say you have a similar rent of 900,000 divided by the total of 1,050,000, right? Multiply it by 1 million. That will give us 857. That was what I did earlier. Please manage with me. I think it's the network that actually made the screen to be blurred. Then to get the non-lease components, we are using the same methodology. In a similar rental agreement, we are having the non-lease component to be 150. So we are saying 150,000 divided by 1,050,000, which is the addition of the 900 and the 150. Multiply these by 1 million naira. That will give us the 142,000. If you understand that, please simply say hi. If you understand how we separated the lease component from the non-lease component, indicate I on the chat room, please. Awesome. Titilayo can get that. Good. I need more people to confirm if you can understand me. Awesome. Adebayo got that. Oh, Ahmed is a bit lost. Oh. Okay, let me explain for the very next time so that those who did not understand can be carried along. The question says there is an annual rental of 1 million and it is for a period of 3 years, right? Now, but the question also confirmed that within that 1 million naira, it is a combination, that amount contains the payment for lease component and the payment for the non-lease component. But we were not told what portion of the 1 million naira is the lease component and what portion of the 1 million is the non-lease component. Are we together? But they further provided us with another details that there is another similar arrangement that is not materially different from this one of 1 million. But in that rent arrangement, they splitted the lease component from the non-lease component. The lease component is 900,000 naira, and the non-lease component is 150,000 naira. Now, when we added that together, so when we added that together, the total is 1,050,000. So we now use this as a basis for rating this 1 million naira into lease component and the non-lease component. Are we together? So how do we do that? Let's do it again for the benefit of those who does not understand. We have similar lease component is 900,000 divided by the total of the similar lease arrangements, 1,050,000. Multiply it by the 1 million naira for this particular lease arrangement. That gives us 857,143. That means from this 1 million naira, 857,143 represented the lease component. While we are doing the same thing, this time we'll be using 150,000 divided by 1,050,000 multiplied by 1 million naira. That gives us 142,857, right? That is the non-lease component. So if you had the 142,000 with the 857,000, you will have the 1 million naira. So remember, we said it earlier on in the earlier part of our presentation that the non-lease component will be accounted for separately as far as IFRS 16 is concerned. So what we did to this in accounting for this is that each time we make the payment of 1 million naira, we will debit cleaning and other maintenance costs with 142,857, and we will credit our bank as the case may be, right? And if it is accrued, we will credit that payable. Is that clear? Now, for the lease components, because that lease arrangement is for a period of 3 years, these particular lease components will now be discounted. Why are we discounting it? Because these payments represent future payments in respect of lease transaction. So we have in year 1, so we have to determine the present value of the lease components. The present value of the lease components, in this question we have 3 years. So you're having year 1, year 2, and year 3. The amount payable for lease purpose in each of the years is 857,143. Same amount is paid in the second year. Same amount is paid in the third year. Now, we were given the discount factor in the question. We will discuss this later. If in reality, how do we get this discount factor? Since the discount factor will not be noted in the lease arrangement or contract. We will discuss that one much more later. But let's take it as though that for the purpose of this question, the discount factor or the risk-free factor is 5%. Now we now have to calculate this. Remember, the formula for this particular one we have provided, if you're doing the present value, right, it is 1 over 1 plus R. R is our discount factor, raised to power 1. So we can simply work this out. What we are simply saying that is that our formula is 1 plus, what is our R in this instance? It is a discount factor. That is 0.05. Or you simply say 5 over 100. Close the bracket, raise it to the power of what? We are in year 1. So it will be raised to power -1. Right? That is how we got the 0.952. You will do the same thing for year 2. You say equals to, open the bracket, 1 plus open the bracket, 1 plus 5 over 100, close the bracket, raise it to power what? This time we are calculating for year 2. So your N will be 2. Sorry, -2 rather. So you have 0.907. So 3 decimal places. That is how we got that. Then for the third year, we are doing the same thing. 1 plus 5 over 100 raised to power of -3, since the year is 3. If you Press the enter, you have 0.864. Please, if you understand this, please simply say I. If you understand this, say I on the chat room, please. Hello, can you hear me? Is somebody there? Can you say hi if you're following? Okay. Okay, awesome. 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 So we can go on. So multiplying your present value is then the multiplication of your discount factor with your cash flow. So simply say your discount factor multiplied by your cash flow. And if you drag this down, we give you the present value of each of the cash flows on the what? Rent, lease component. The additions of these will give you 2.3 million. This is the amount you will recognize as your right of use of assets. This is the amount you will recognize as your right of use of assets, and that will also be recognized as your lease liability. Remember, we said it earlier on, that the standard emphasized that the right of use of asset has to be debited, recognizing the assets, and the liability has to be credited. So we will credit the lease liability with the 2.3, and you will debit the assets with 2.3. Now, because you are recognizing right of use of assets, any standard, because you are actually recognizing an asset and you are using that asset over the useful life, it is presumed that this asset must be subject to depreciation. So IFRS 16 provides that right of use of assets must be depreciated over the useful lives. And when you are doing that, what amount are you depreciating? It is the right of use of asset of what? 2.3 million. So that is what we depreciate. We depreciated across the 3 years here. So I divided 2.334212 by what? By 3. Why am I using 3? It is because the rental period is 3 years and the right of use of assets has a total of 2.334213. So that is the step 3 to doing this. The next thing is now that for you to recognize the thinking of IFRS 16 is that this 2.3 million will be invested at an interest rate of 5%. And as the interest accrues, you will now use it in what? Making your rental payment. So that is what we want to do here. So you have the years, you have your lease liability. You are paying this sum on a regular basis. This is the principal component of the amount you should pay over the 3 years. Do you understand? So 2.3 was invested at 5%. If you calculate 5% of the 2.3, you will get 116,711. Then you will make an annual payment of 857 that we calculated above here. Because every year, as you pay the 1 million, 857 is the lease component, 142 is the non-lease component. So it's that 857 that will be recognized here. So if you add the interest to the principal, remove the payment you have made, you will have a balance of 1.5. That 1.5 will be brought forward as the outstanding in year 2, right? 5% of 1.5 will give you 79, out of which you will now make another annual payment of 857. Remember, as you pay the 1 million naira every year, out of this 1 million naira, 857 is representing the principal component, 142 is representing the lease component. So it's the principal component we are recognizing here. Are we together? So if you deduct the 857 from the addition of 79,001.5, you will be having an outstanding balance of 816, right? So this 816 will be carried forward to the year 3. You are investing 816 at 5% and making a payment of what? 857. Don't forget, as we make the payment of 1 million, 857,000 of it is lease component and 142 is the what? Non-lease component. So it is the principal component that will be recognized here. By the time you make this last installment payment, you will have fully discharged all your responsibility and the balance here will be 0. So this is the requirement as far as IFRS 16 is concerned, right? The next thing is now to put this into perspective and such that it can be reflected on your financial statements. What we are simply done is the measurement requirements of the standard. Please indicate I if you understand this. Our time is almost up. We might probably need to have a second phase of this training, but thus far that we have done, let's be sure that you actually understand what we have done. Indicate I if you understand it. Indicate I if you understand. Ayobami, confirm you understood. That is good. That is good. Okay, Benjamin understood. That is good. That is awesome. 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 So, Makide, for the purpose of your question, I need to understand it clearly. Can you unmute your mic and simply put the question forward? Makinde.
Okay, yeah, good morning. Good morning,
If I
everyone.
understand you right, confirm yes if
Yes.
what I want to say now is what you are trying to ask. That
Okay,
is
I'm
it
with
necessary or is it important for us to compute present value?
Yes, you're right.
All right, all right. As far as the IFRS 16 is concerned, it is very important that we calculate the present value. Why? It is so important because you are having a long-term commitment. You are having a long-term financial commitment. In business mathematics, you will have been told that 1 naira, the value of 1 naira today is not the same value of 1 naira next year. So if you have a lease arrangement and you are expected to pay 1 million naira over the years, it is important for you to recognize it today. You need to calculate your present value. Yes, the present value is important and it is the benchmark for us to depreciate the right of use of assets. The difference between the principal components of the right of use of assets and the rental component is the interest element, right? It is the interest element. That is the interest you are assuming that if this particular sum of money has been put to investment purpose or investment vehicle over the 3 years, this is what it will have earned. So it is important for you to recognize the right of use of assets, which is the principal component of the leased component, while the interest expense must be recognized, but you are not depreciating the interest expense. You are writing off the interest expense as the year accrues. You will see that much more later in a more detailed and practical session. Any other questions? Can we go on? Okay, somebody else is asking whether the interest will be recognized as an income. No, it is not an income. It is an expenses. I have cleared it at the beginning of this session that IFRS 16, anytime you are working with IFRS 16, you should bear it at the back of your mind that you are reporting for the lessee. And because you are reporting for the lessee, it is important that you note that that amount you are paying for the use of that asset is an expenses to you. Do you understand? It's an expenses to you. Because it's an expenses to you, for accounting purpose and for you to adhere to what IFRS 16 has said, we decided to separate the lease component into the principal portion and the interest portion. So the principal portion and the interest portion, if you add it together, will give you the total of the lease component. So it is an expense in the book of the lessee. Okay, any other question before we go on? Can we go on? Indicate I if we should go on. Awesome, awesome, awesome. So I will switch back to my so what we have simply done is to solving this question by separating that 1 million naira annual rental payment into the principal portion and the interest portion, right? And we have also explained how this particular scenario will have been treated if it were to be within the purview of IAS 17. And we've also explained what amendment will have been made, will be required to be done to this if it is expected to be done in line with IFRS 16. At KCP, we are very conscious of time, and I know that a lot of people had programmed certain things for each day. We will not mind having a repetition of this in our subsequent training. We have barely 3 minutes to the end of this session, but there are still so much to be said. I mean, so much to be considered that is here to be said. We will communicate in a similar way when the last version of this particular training will be held, but we need feedback from you. Based on what we have done thus far, please put forward any of your questions. Okay, Titilaya is asking, must the interest rate be equal to the discount rate factor? Titilaya, I'm so sorry if it appears as though my voice is sounding like that of a lady, but I'm masculine. I'm not a lady. Okay, so in response to your question, oh, you said you did not start the class with us, okay? So you want to know whether the interest rates will be equal to, oh. Oh, Oh, Olumide, am I really sounding like a lady? Oh, I'm sorry. I'm sorry. I'm not a lady. I'm not a lady. Oh, hi, yeah. Tope said I'm not sounding like a lady. All right. So to quickly run this up so that we will not waste much of your time. We will call it up here today, but we want to, within the next 5 to 10 minutes, we want to entertain questions from anyone that has such questions. So I'm putting up my video so that you can see that I'm not a lady. Somebody is saying I have a soprano voice. Oh. All right, any question? Please remember to ensure that you provide your full names, your email address, and your phone number, such that we can provide you details of this. Somebody is raising. Christopher, you can unmute your mic and actually ask your question. Unmute your mic and actually ask your question. Unmute your mic, Christopher. Christopher, unmute your mic. Any question? Christopher, any question? Oh, you don't have any question. Good.
No, sir. No, sir. Yes.
Who else has any question to ask? Who? Christopher, you have a question?
No, sir.
Okay. Who has a question? Any question? Okay, so as part of the feedback we are getting, most of our subsequent training may be on the weekends, such that we can actually accommodate the requests from various people that are busy with their working schedule. Okay, so that feedback is noted. Titi Laya said, I've not answered our question. Interest rates and discount rates, they're actually the same. They're actually the same, but it is the risk-free portion that we are using in discounting this particular lease component. It is, there is a difference between, there are some interest rates that include or that may include a risk factor. So the non-risk factor is what we are looking at. So at every point in time that you are considering the interest rates, make sure that it is the interest rate for a risk-free security or investments. Does that answer your question, please, Titilayo? Titilayo, confirm if that has answered your question. Okay, good. So I want to, in the absence of any other question, I want to appreciate everyone who has created time for this particular training. This, your sacrifice is not taken for granted. We sincerely appreciate you. On behalf of the entire management of KCP and the staffs, we appreciate you. Thank you so much. And we look forward to having you in our subsequent training. all your observations have been taken into consideration. Should you have any requests, maybe on IFRS 16 or any other standard, I will be providing my personal mail, my official mail, I meant to say, and my phone number. You can reach out to me. Yes, I will provide my contacts to you. My email address is acol@kcp.com.ng. And my phone number is 090-244-00652. KCP is located at number 12, Lanre Awolokun Street. Okay. NCI bus stop, Bagada, phase 2. Oh, is that private? Oh, really? Please, everyone should confirm if you got my email address, my phone number, and the address, and our office address. Are you serious? Where is that? I didn't see it. Okay. Okay, so I'm providing the email again. Of course, everybody should know my name now. Now, Adekunle Cole. Email address is acol@kcp.com.ng. My phone number is 090-244-00652. And we are located at number 12, Lanre Awolokun Street, NCI bus stop, Bagada, phase 2. Bagada. Please feel free to reach out to us on any of your IFRS question. If you so need our accounting service, we are also available for you. We render accounting services, support services, external audit services, or any form of tax investigations, and we also render tax advisory services. And if you so need training services for your finance team, or you need a personal training on anything relating to finance, tax, and accounting, we'll be glad to be of service to you. Okay, so you can also follow us up on our website, www.kcp.com.ng, and our LinkedIn page. So thank you so much for your time. Please, I'll be looking forward to having any of your questions, requests on any aspect of what we have considered. Also, chat us up on any other topic that may be of interest to you. So thank you. Bye for now. Enjoy the rest of your day.